Let's do Dollar Tree, Paul.
So Dollar Tree has 7,500 stores versus 16,000, including over under. No, wait a second. Including over 700. Oh, and 7,700 Family Dollar stores. So they have about 15,200. So they're almost, the same size as Dollar General.
If you're watching this video later, we do not do a ton of due diligence. We take a lot of these requests from our live stream. So this is just a first overview, a first glance at Dollar Tree to see if we want to look deeper. Go ahead, Paul. What's the market cap? What's the market cap of Dollar Tree, baby?
About $25 billion versus 48 for Dollar General. So half the market cap. I'm not saying it means anything specific, but around the same stores, half the market cap. Just keep that in mind.
Okay.
PE ratio of 25, that's an X.
Little high.
Little high. Profit margin in the last quarter, 5%, but for the last year, it's about 4%. It's a little bit under 4%. So that's an X and no dividend. Okay? So according to Mark Cuban, we should not look at this company's fundamentals because they don't have a dividend.
In comparison to Dollar General's PE ratio was in the sweet spot that we wanted. So we're 2 X's on Dollar Tree. Let's look at the revenue growth, Paul's pillar number 3.
Revenue growth, last 5 years, 15.5, 23.6. Check mark there. Look at this. Big jumps. What happened here? Obviously acquisitions. I have a hard time believing they doubled their revenue in 1 year. There must have been the acquisition here. Did they buy Family Dollar? Was it a different store? I mean, I don't know. Actually, I want to skip right to the cash flow statement to see what they purchased back these years.
Good idea.
Oh, right here. So guys, somebody find out what they bought in 2016, please. They bought some company in 2016. They still had a big jump. That was pretty YOLO. Okay.
Pillar number 4 is profit growth over the past 5 years, Paul.
Is the profit growth? 282 million to 827. Check mark. But guys, look at this. 282, 896, $1.7 billion, lost $1.6 billion, 827. This tells me here that there was some write-off of some sort. Because I have a hard time believing they went from some one-time event occurred. How did they go from such consistent profit all these years to all of a sudden crash? So something happened here. So it's still a check mark, but watch out for that. Understand what that's from.
Dollar Tree completed an acquisition of more than 8,200 Family Dollar stores across 46
I remember
states.
I said whatever it was Family Dollar, and that's what it was.
So it was a 2015 and completed in 2016. Thank you, Ray. Love you. Keep going, Paul. What is pillar number 5, the shares outstanding? Are they going down?
They're not. 222 to 237. That's an X there.
And
that's an X.
X on shares. And I hate
X on shares, on shares, on shares.
I hate to interrupt, Paul, but they want a watch check out there. What's on your wrist today?
Oh, boy, folks. This is the
What is
Sky
this?
Dweller.
Oh, boy.
The Sky Dweller. Why is Mo smiling there?
I assume this is a Fossil watch.
This is Fossil, if you spell Fossil, R-O-L-E-X.
So go ahead and Google that if you're interested in watches. Pillar number 6 is current assets greater than current liabilities, Paul.
All right, 5.2 billion down to 4 billion. So that's a check mark there. They have plenty of cash on hand to pay their current debts.
We're looking at Dollar Tree, 3 X's, 3 checks. We're still in the middle of the road here for pillar number 7, which is free cash flow growth, Paul.
All right, so free cash flow, guys. Remember, free cash flow is used to buy back shares, pay dividends, and make acquisitions. Keep in mind, they have more shares and they pay 0 dividend. So the free cash flow should be going right to the pocket to pay. That's something you have to figure out here. But free cash flow, 320 million and 800 million, 870 million. Sorry. So check mark there. Yeah! And then 1.1 billion, 900 million, 900 million.
The average free cash flow for the past 5 years is 820 million.
820 million times 20. If you want to do 20, it's 16.4 billion, and they're at 25 right now. And guys, I'm going to go ahead and say that, increasing shares, I want to be lower than the 16.4. I don't know if 20 is the right number. So this is where we talk about, so it's an X here too. This is where we talk about what free cash flow multiple do we want to pay. The free cash flow multiple, I look at it as an overall picture. Okay, the company's growing, but they're increasing their shares, not paying a dividend, which I don't really care about that much. But I look at it saying 20 times free cash flow. I actually think Dollar General is a better value than Dollar Tree. But let's look at the last 1 year. Do they have the same jump in the last 1 year on their free cash flow?
This is Dollar Tree.
Yeah, 1.6 billion.
Yep,
so.
this is Dollar Tree. Keep going, Paul.
So I sit there and go, okay, I want to pay a lot less than, so it's $100 a share right now. Guys, this is going to sound extreme, but unless they're going to buy back shares with their free cash flow, I want to pay about half. I mean, I look at this going, guys, you're increasing your shares on me. You're diluting me along the way. Give me a reason to buy your stock. Give me a reason. The reason's got to be somewhere. The bottom line is I'm not buying it at this price. Yes, we did an overview. The overview says to me, I'm not buying it at this price because they're increasing shares. The profit is good, but it's a little less consistent than Dollar General. So that's where I stand on this.
Mo, would you like to look at the momentum for Dollar Tree?
Yeah, good news for Paul. They are in a straight downtrend right now, and if they can break this, so we're going to talk about gaps up. This is a gap up where the stock price really jumps up on you one morning from one level to the next, maybe from $80 to $90, and it doesn't fill anywhere in between. Typically, when stocks jump up like that, they will eventually come back down to kind of fill that gap because there's none of those W formations in there creating any kind of support levels to move up. So I could see this thing moving down to this 90 level, maybe moving down to this 80 level. I mean, this is where they were back in March, April. So there's a chance. There's definitely a chance. Interesting thing about Dollar Tree. What is this, Dollar Tree?
Yeah.
Everything in their store is $1 or less. Dollar General, that's not the case.
So literally, Dollar Tree has $1 or less?
$1 or less. Dollar General can be up to maybe it's $10 or something, but not everything is $1.
See, I don't like that then. Like to me, I'd rather have Dollar General because just like Five Below,
Yeah.
I look at Dollar Tree going, at some point you can't sell stuff for $1. I mean, 25 years ago they were selling stuff for $1. I mean,
it's literally $1 or less for everything.
I prefer Dollar General right now based on what I see right now.
That is our take on Dollar Tree, everyone.
It's 154, Seth. We don't have time to do another company before we do this announcement at 2 o'clock, unless we want to answer some questions beforehand.
Yeah, let's do 5 minutes of Q&A. We have two other stocks we're going to do today, Target and Walmart. We
And
will
even
get to
TJ
that.
Maxx if we have time.
And TJ Maxx, let's do it. Yeah. But we will take some general Q&A. Paul, what are your thoughts about Tissot? Is that the watch company?
Tissot is the watch company. I think they're a great watch. I don't have any, but I do think they're a great watch.